watching Primetime. I'm Tamanna.
And my name is Ayush. Let's start with today's headlines. Yes Bank earnings reveal underreporting of 6,355 crore rupees of bad loans for FY17. And the bad loan pain continues. Gross non-performing assets more than double in the second quarter.
The European Central Bank sets its sights on stimulus exit. President Mario Draghi says the bond buying program will be cut by half to 30 billion euros starting January.
Shareholder approval won't be needed for a resolution plan under the Insolvency and Bankruptcy Code, says the government.
Farm loan waiver payouts in Maharashtra will be delayed. A senior state government official says the review of list of eligible farmers will take at least another month.
Rahul Gandhi hits out at Prime Minister Modi over the note ban, says the 8th of November will be the death anniversary of the demonetization drive. Also says Startup India cannot be accompanied by Shut Up India. All right, starting off with our top story. Now, the NPA menace is back to haunt Yes Bank. The bank's asset quality continued to deteriorate. The NPAs doubled from the previous quarter. The surge in NPAs was also due to the divergence that the Reserve Bank of India red flagged in its assessment of the bank's books. Vishwanath Nair of Bloomberg Quinn joined us on the show to take us through the highlights from Yes Bank's second quarter showing. Vishy, the failure to report NPAs certainly is weighing heavy on Yes Bank, isn't it?
That's right. So about a 6,355 crore number. That's what's coming out from the Yes Bank results. That's the divergence between what the bank believes should have been an NPA and what the RBI believes should be the NPA number for the bank for the financial year ended March 2017. Essentially, what the bank is saying is that most of it has been recovered or has been upgraded in the 6 months between March 17 and September 17.
Yes.
And 47% has been upgraded. Some of it has been repaid. Some of it has been sold off. So they're essentially saying that we're fine. But the question is that what happened in March 2017? Why didn't you disclose it back then? Now, essentially what the management said was that we didn't have enough time between the two divergence announcements to actually get our books in order. And we'll just listen to what Rana Kapoor, the MD and CEO of the bank, said on this matter.
The last divergence was communicated to us as recently as March of 2017 for the period ended March 16. So by the time we, completed our discussions, it was almost like the end of the year. And this particular, review has been practically with a gap of only a few months, and therefore there's not been enough curing time within the system.
Well, that's a big divergence question that you were speaking about, Vishwanath. Yeah. But overall, what was the big message from the numbers? Can you give us a quick run through?
So apart from, let's look away from the divergence for a bit. Even then, during the quarter, the bank saw slippages worth about 790 odd crore, which is a significant number during a single quarter. But if you take away the asset quality problems for a short bit, let's look at what happened with the profit. The profit has risen quite a bit, about 25% growth year on year on the profit side. Their advances and deposits have both grown quite strongly. Now, deposits, as we all know, in case of Yes Bank, what is happening is CASA ratio, which is the current account and savings account ratio, which is what the money that we put in the banks. That has been growing quite significantly because they offer a slightly higher rate than what everybody else offers in the market. So they're fine. Even on the retail deposit side, just the retail deposit, which is CASA plus the fixed deposits, put together accounted for nearly 62% of the total deposit. That's a good number for a bank of Yes Bank size because you have more low-cost deposits, and therefore that ensures that your margins are better. You have cheaper deposits, cheaper funding, and therefore you can give out loans at an adequate rate.
What's the big story here? Because we've seen a couple of results coming in. You've been tracking in the private sector space as well. And while there's a lot of focus on the problems in the public sector banking space, the government is also getting in with its solutions, recapitalization, etc. What is the story playing out in the private sector banking space through the results we've seen so far?
So, in the results we've seen so far, what specifically comes up is what happened with Yes Bank and then with Axis Bank a few days ago, right? Sometime last week, Axis Bank also announced kind of a divergence. They said that they are in discussions with the regulator. They're trying to figure out, what they can and cannot classify as NPA. So that problem exists. So both of these banks. Remember, this is the second time it's happening, right? This already happened earlier this year for the financial year 2015-16. Now, again, for 16-17. It's surprising that, private sector lenders that pride themselves on that governance principle, on the principle of being better at doing this than public sector banks. Yeah. They're getting caught in the middle of all of this, and they're being questioned by the regulator quite clearly.
Well, Vishy, what's interesting is that in terms of a divergence number, now that amount is nearly 3 times the reported amount. Yes. So it's no small amount.
Yep.
And you're saying this happened the second time around. It happened with Axis earlier. What does this say about governance, really, at India's banks?
Yeah, so exactly, right. So that's the key question. What do you think? Why should I trust the banking, this banking entity's number if 6 or 7 months later the regulator is going to come and say the number is actually 30% higher or 40% higher? It just doesn't make much sense for us.
That's a big story which we should explore even further, and we will right here on Bloomberg Quint, because while public sector banks at least have some sort of a solution in sight over the next 2 years, what happens to private sector banks? But moving on, in a policy shift, a European Central Bank unveiled plans to reduce the quantitative easing program from January 2018. So what is quantitative easing? It is the process in which central banks buy government bonds to stimulate economies when lowering interest rates alone fail to boost an economy. ECB had a €60 billion a month program since 2015. ECB announced that its quantitative easing program will be reduced to €30 billion a month for an initial period of 9 months, starting from January 2018 to September 2018.
However, interest rates will remain at their current levels well past the stipulated time that its QE program is valid. Now, ECB said that the rates will be reviewed and policy will be adjusted from September 2018. This decision marks an end to the ultra-accommodative stance of the ECB that it put in place in the aftermath of the 2008 global financial crisis. Now, while the inflation is still below the ECB target, the central bank has decided finally to gradually move away from the stimulus era. Alessandro Special of Bloomberg News asked ECB President Mario Draghi if there's any chance to extend the quantitative easing program after September 2018. Here's Draghi's response.
The commitment that the Eurosystem has taken today is that it will reinvest the principal payments for maturing securities purchased under the APP for an extended period of time after the end of its net asset purchases, and in any case as long as necessary. So there isn't any specific link with interest rates. So there is no link here. Now, on the flexibility, I think on the credibility, on the potential constraints, I think you've been asking, not you, been asking this question: will you make it? Since the very beginning of the QE program, or at least at regular intervals, and each time we gave plenty of evidence that both our design is flexible enough to cope with the potential limits. And we gave plenty of evidence that the Governing Council is committed to that.
All right, just to understand that, we're joined by Paul Gordon of Bloomberg News from Frankfurt. Paul, the ECB decision clearly wasn't unanimous. Plus, Draghi said that the euro area still needs ample degree of stimulus. How are the markets interpreting the ECB stance?
Quite dovishly, the euro fell about 0.5%. European bonds jumped on this as well. The signal here was, of course, that yes, you get your 9 months of 30 billion euros, which was roughly in line with expectations. Another $250 billion, bit over that, euros added to the QE portfolio. But there were other measures in there as well. You noted there Draghi talking about the reinvestment strategy, so that could go on for quite some time. It's going to still be a while before interest rates are raised as well. And there were some technical measures that the ECB was effectively reminding people of, such as the fact that banks can go to the ECB and get as much money as they want at a fixed rate as long as they have the collateral. So all in all, this is a very cautious step, and the liquidity keeps flowing.
Thanks so much for that, Paul Gordon there. from Frankfurt, from Bloomberg News. Now, that ECB policy decision has powered European markets higher, as Paul was mentioning, with all major indices rising sharply in reaction. This comes on a day when corporate earnings have disappointed. The dollar plunged against the euro before recovering a little towards the end of Draghi's speech. There you have the indices on your screen, the FTSE 100, the CAC and the DAX in the green. The CAC, in fact, over 1% up.
Now, the Maharashtra farm loan waiver has hit a roadblock. Several farmers' names have been repeated multiple times in the list provided by various banks. So the government has gone into damage control mode, it seems. Purva Chitnis of Bloomberg Quint is here with an update. Purva, what do you have for us?
Yes, Ayush, when we spoke to the State Finance Minister, Sudhir Mungantiwar, what he said is right now the government's priority is to get this verification process in place. So the bank, what he said was like the list which was provided by the banks had a lot of technical glitches, and his priority would be to get this verification process right. And even the State Cooperation Minister reiterated the same thing, that the verification process currently is underway, and although it is difficult to predict like in how much time will this entire process be completed, but both the ministers expect that this process will be completed in 1.5 months. And also our sources in the department said that in about a day or two we will get that first re-verified list out. But one thing which is very interesting is what the State FM told us is that the people whose names have already been verified and have already been given waivers, those names will not be re-verified again. So it's interesting to see what the government comes out with. Back to you, Ayush.
Purva, I just want to put some context to this entire story, because you remember a day before Diwali, on the 18th of this month, in fact, Chief Minister Devendra Fadnavis had done this entire function where these loans were being handed out to farmers. So is this that tranche of loans which is now being delayed? And what were the glitches that occurred? If you can give us some detail on why this delay has actually happened in the background to that.
Sure, Tamanna. So basically, from 18 October, when Devendra Fadnavis started this entire process of disbursing the loans and waiving off these loans, now those like 8.4 lakh farmers is precisely what he told the media back then. So what we learn is right now that that list will not be re-verified again. But here we need to wait for more details from the government as to what exactly is their stand on this. And also like the technical glitches, what we learn is right now for one particular, like one Aadhaar number is probably linked with a lot of different names. So like, different people have like same Aadhaar number. So that's why there is this problem as to actually verify which is a genuine account holder, and that is actually the entire glitch. So this is what the re-verification process is going to be all about.
All right, Purva, thanks so much for that update. Now, the government has come out with a much-needed clarification on the insolvency and bankruptcy law that could pave the way for faster resolution plans. Payaswini Upadhyay is here with us, bringing us all the details.
Okay, let me first start, guys, with the basis of this clarification. Now, there are several corporate actions, for instance, mergers, demergers, asset sales, issue of shares, that ordinarily require shareholder approval under company law. Now, what this recent circular clarifies is that under the Insolvency Code, when a resolution professional is considering resolution plans or those that are approved by the NCLTs, those resolution plans, if they envisage any of these corporate actions or any others, will not require shareholder approval. Now, simply put, for instance, as a resolution plan that may envisage an asset sale will no longer require a shareholder approval. Most experts who I have spoken with have welcomed the move, saying that, shareholders who have no economic value left anymore in the company should not have any power to decide what should happen, and the committee of creditors should have the final word. Now, that's part one to this. The second part of this circular also clarifies at one place, or also says at one place, that the exemption from this shareholder approval is not just under Companies Act, but also under any other law. So does this mean, for instance, material related party transactions that require shareholder approval under SEBI's listing agreement will also not need shareholder approval. Lawyers at this point seem to believe so. But broadly, experts have welcomed this clarification. They've said that it will expedite resolution process because otherwise controlling shareholders could come and litigate the process. So broadly, good news for resolution processes.
So it eases the entire process.
I mean, it expedites. It removes the hurdles that from controlling shareholders could have created at a later stage for resolution plans that have received approval from the NCLTs.
Okay, so one possible hurdle now may become easier. Thanks so much for that, Payaswini. Now, pharma major Biocon's profits declined for the third straight quarter. Yash Upadhyay joins us on the show for more on Biocon's Q2 showing. Yash, not a very healthy quarter for Biocon, is it?
Good evening, Tamanna. So yeah, Biocon did report a disappointing set of numbers. Most of them below analyst estimates. Revenues increased by 2.4% to 969 crores, below our estimate of 1,027 crores. Net profit declined by as much as 53% to 69 crores versus our estimate of 113. Margins saw a significant contraction from 25% to 19% versus our estimate of about 23%. Digging deeper into the numbers, we've seen that margins saw a significant impact on account of higher employee costs and finance costs, while other income saw an increase of 34% on a year-on-year basis. Tax expenses too increased from 19.9% in last year to 32.3% in the second quarter of FY18. Taking a look at the segmental revenue, we can see that the small molecules business saw its revenues go down by as much as 13%, while the biologics revenue came in largely flat. However, the branded formulations revenue did saw a bump up of as much as 29% on a year-on-year basis. We spoke with Kiran Majumdar-Shaw, the chairman and MD of Biocon, and she had to say that the changes in the plant design in order to comply with the regulatory approvals resulted in some production disruption in the second quarter of FY18, while higher facility costs at its Malaysia unit and pricing pressure in the API business resulted in the net profit going down significantly.
All right, Yash, thanks so much for that comprehensive report. Now, moving on to what happened in the markets today. Indian markets ended the October series at fresh record highs. Both the Nifty and the Sensex gained sharply, led by gains in Maruti Suzuki, Axis Bank, Larsen & Toubro and Tata Steel. Among individual sectors, oil and gas index surged by 2.2%, while consumer durables index incurred losses. Pradeep Pandya sums up all the day's market action in this report.
Well, it was a record expiry for October month, really, so to say, because on the expiry day, Nifty and Sensex managed to hit all-time highs, and even Nifty Bank, for that matter, managed to give a record expiry. This was first time that Nifty Bank series expired above 25,000 levels. So that was yet another record in markets today. If you look at some of the interesting stocks, well, even the mid caps and small caps were trading higher today, contrary to what happened yesterday when all the PSU banks were moving up. The action was only limited to the large caps and only mid cap financials or PSU banking. But today in the broader market, there was buying interest across segments. So that was another strong point of the day. One could say, look at what happened to the banking stocks. But, interestingly, the banking stocks that moved up, the PSU banks that moved up 20-25% and even 45%, if you talk about PNB, the stock saw some amount of follow-up buying in early trade today, but it came off day's high. But PNB still was relatively strong. If you look at what happened to SBI, Bank of Baroda, Canara Bank, all these stocks came under significant selling pressure. From 350, that was the day high, SBI came all the way down to 320 towards the close. So it's possible, looking at the kind of reports that we have seen from key analysts, both local and FIIs, there could be a considered buying that may re-emerge at a later date. But as of today, on the second day of this PSU rally, we saw significant intraday correction. So traders were taking at least some money off the table. HDFC Bank was interestingly a stock that came under strong selling pressure today. Look at some of the other sectors. SAIL, that is Steel Authority, BHEL. These were some significant PSUs that supported the markets really. Among mid caps, Polaris was the stock that saw significant action was logged a 20% circuit through the day on the back of news that the parent is considering to delist the Indian listed entity. Dilip Bilcon continues to move up. This is the strongest player in the construction and infra space as of now. Well, earnings were also a very significant mover in today's trade. Look at two stocks, Jubilant Food and also Shoppers Stop. Jubilant Food managed to outperform the market, beat the street estimates on top line and bottom line and also margin, but same store sales were not that strong, so it came off. Still managed to close with a gain of 2.5%. Shoppers Stop came down by 2%, although management has attributed the weaker quarterly numbers to implementation of GST. Chemical was yet another segment which was strong in today's trade. Himadri Chemical and Gujarat Fluoro were some of the gainers today. Among losers, if you see, there were HCL Tech, Tata Communications and some other stocks. This was mainly because of weak second quarter numbers.
And markets regulator SEBI today revised the framework for block deals by providing two separate trading windows of 15 minutes each and increasing the minimum order size to 10 crore rupees. The move is aimed at ensuring confidentiality of the large trades and stable prices for such transactions. Besides, the regulator has increased the minimum order size for execution of trades in the block deal window to 10 crore rupees. Presently, block deals for shares worth 5 crore rupees through a single transaction is allowed.
Now, the Aadhaar debate just refuses to die down. The government's move to make the unique identity number a must for filing tax returns has hit yet another roadblock. A petition filed in the Supreme Court has called for the provision to be struck down as it invades privacy. What are the grounds for this fresh plea? Arpan Chaturvedi of Bloomberg Quint filed this report.
So what this petition basically seeks is that Section 139AA of the Income Tax Act, which basically mandates the linking of the PAN card of every citizen with an Aadhaar card, basically making the Aadhaar mandatory for filing tax returns, this section be struck down as unconstitutional and illegal. Now remember, there was earlier also a similar case which was heard and then a judgment was passed by the apex court. Now the same petitioner who was the petitioner in that case has now again approached the court, and what the grounds he is making now in this petition are two. One was the triple talaq judgment, in which one of the judges' judgment basically says that one of the laws, any law that is arbitrary, can be struck down on grounds of arbitrariness. And the second is the 9-judge bench, the judgment of the 9-judge bench on the subject of right to privacy as a fundamental right. Now, the petitioner says is that on those two grounds, this issue of Section 139AA, which is mandatory Aadhaar for filing of tax returns, was not tested, and after these two rulings, now this case must be re-agitated, and these two issues or the outcome of the different court judgment should also be taken into consideration. Right now, there is no fixed date for this hearing to take place.
And a little while later, I'm talking a bit more about Aadhaar. Ayush, this is quite interesting because Aadhaar gets challenged on so many fronts.
Absolutely.
What we're talking about today is linking your Aadhaar to your mobile phone.
Right.
A few days earlier, West Bengal Chief Minister Mamata Banerjee
refused
said,
to.
I'm not going to, you can disconnect my phone. There are petitions pending on that, and we're going to talk about why the fuss. Why are people against it? We're going to try and hear both sides of the story.
Sounds like an interesting debate. Can I weigh in on it at some point in the comment section?
Yeah, please do. And not just Ayush, anyone can weigh on it. Tell us what you think about it. We're talking about the Aadhaar disconnect on Primetime Debate later on. In a fresh attack on the Modi government today, Rahul Gandhi said that 8th November will be celebrated as the death anniversary of demonetization, not of demonetization, actually of the 500 and 1,000 rupee notes. He also said that the Prime Minister failed to understand that all cash is not black and all black money is not in cash. Several comments which he was making at a group where he was addressing a group of businessmen. Let's listen in.
November the 8th. Is the Barsi of Notebandi. A day when Sri Narendra Modi personally wiped out 86% of the currency in circulation overnight. The Prime Minister failed to grasp a basic concept of the Indian economy. The most fundamental concept. All cash is not black and all black is not cash. I'm not talking of technology making jobs redundant, as is happening in the West. This is a pure man-made disaster, or in Modi ji's terminology, an MMD, a Modi-made disaster. Startup India is welcome for the economy, but it cannot be accompanied by shut up India.
Now, in view of the rising pollution levels, the Delhi government may once again resort to, well, the famous odd-even scheme. Now, Transport Minister Kailash Gehlot has said that, writing to the Delhi Transport Corporation and the ministry, he asked them to be prepared for emergency measures, including implementation of that scheme. The statement comes after, well, last week, when the Supreme Court appointed Environment Pollution Control Authority had said that it would not hesitate to enforce the odd-even plan if needed.
Now, a fire broke out in the Behrampada slums near Bandra suburban station in Mumbai this afternoon. The incident took place during an ongoing demolition drive by the municipal corporation. Train services on the harbour line were halted as a precautionary measure as the fire was very close to the booking office on the east side of Bandra station. 16 fire engines and 10 water tanks were deployed to douse the fire. There is no information on casualties yet or the number of injured.
He leads one of the world's largest tech companies, but once upon a time, all Satya Nadella wanted to do was play cricket. It was in fact his father who pushed him to take up engineering, and the rest, as they say, is history. Speaking to Carlyle Group co-founder David Rubenstein on The Rubenstein Show, Nadella also spoke about the advice he got from Steve Ballmer and Bill Gates.
From both Bill and Steve, I think helped me a lot, because their clear message was, don't try to be like us. Don't even bother to sort of say, oh, I'm succeeding these people. Just be your own. In fact, I remember very distinctly, even during the interview process, this is for the board was conducting, they asked me, hey, do you want to be the CEO? And I said, only if you want me to be the CEO. And the feedback I got was, well, but people who want to be CEOs are like, I want to be CEO. I said, look, that's not me. And I remember going and talking to Steve, and he says, yeah, just be yourself. It's too late to change.
Growing up, your parents doted on you, I assume?
Yeah, they did.
And they told you were going to be Prime Minister or something important in the country? What did they want you to be?
They just wanted me to stop playing cricket and take my studies a little more seriously.
Now, you were an avid cricket player, is that right?
Yes, that is correct. I was in love with it, yeah.
And when did you realize you weren't going to be a professional cricket player?
Pretty soon. Quickly, I realized that at best, I would play, what is considered perhaps first-class cricket in India, but I was not going to go much further than that. That's when my dad, in fact, I remember one of the big decisions that changed my life was, my entire outlook was so provincial when I look back at it, which is, hey, I want to stay in Hyderabad, maybe study economics and political science and work for a bank. That was about the extent of my ambition. And he looks at me and he says, what are you doing? You got to get out of this place. And so he pushed me out to get to an engineering school, and that pretty much, of course, defined the trajectory afterwards.
Now, auto shows the world over are renowned for showcasing futuristic technology in the auto industry. And the Tokyo Auto Show is no different. Going green seems to be the new normal for Motown. And global automakers have pulled out all the stops in Tokyo. From some of the hottest concept cars to self-balancing bikes. Also to the most innovative use of space and design. Automakers have descended in Tokyo with bags full of goodies. Nissan, Toyota, Mazda, Yamaha, Mercedes, Lexus, Honda have all come out with models that will make your jaw drop. Judging by what's on offer, electric vehicles certainly seem to be the cars for the future.
Wow, really futuristic stuff.
Yes.
BloombergQuint.com is where you need to go to see more on the Tokyo Auto Show and all the stories we've discussed on Primetime this evening. Thank you so much for joining us. But quick programming reminder, Primetime Debate up next. We're talking about the mobile Aadhaar Connect up first.